Hello friends, this is Vijay Bambani here. I'm back with you in this video to talk about a segment of the market that's not exactly into equity stocks, but it impacts your equity share investments absolutely directly. I'm talking about the aspect of whether the commodity bull run is halting, tired, pausing, or has it completely reversed? And I'm basically addressing the industrial metals or base metals specifically. Do remember that what I'm talking about in terms of these base metals will impact equity shares like Tata Steel, Hindalco, JSW Steel, Jindal Steel and Power, etc., etc. So I have chosen, the methodology is very simple. I have chosen the 5 base metals that are listed on the multi-commodity exchange in India, where when I'm talking about these commodities, I'm talking in terms of Indian rupees per kilogram as a unit. So let us see whether the commodity markets in India have paused, reversed, or are they only basically catching their breath. Do remember that I have been saying I do not subscribe to the hypothesis of a super cycle in the base metal market, although I do admit that these markets are in a bull market. What is the difference? The difference is not so subtle. In a super cycle, like I have been saying in my past videos, the buyers are thrashing on the doors of the sellers and saying, please give me more stuff. Please give me more commodities. I'm willing to pay whatever you're asking for and more, but keep the goods coming. That is not happening. In a regular bull market, you will see the prices go up. There will be corrective declines and then again the rally resumes. This is not a one-sided market. So a commodity super cycle is not something that I subscribe to, although I will admit that there is a bull market. And therefore, your investment in commodity stocks will also be susceptible to price shocks whenever there is a corrective decline in the underlying commodities. So I'm going to take a case by case, metal by metal study, and I'm going to point out the name of the company that will get directly involved, the company's share price that will get directly involved with the metal. So let's start alphabetically. I'm beginning with aluminium, which was approximately, I'm using the word approximately here, 125 rupees per kilogram in March 2020 when the markets bottomed out after the pandemic-induced lockdown. It hit 206, 208 odd levels in May 2021. That was a huge rally. And then there was a precipitous fall to 884 levels approximately in June 2021. Now, as per the classic Dow theory, a bear market ensues in any item if it surrenders 20% or more from its peak price. So if aluminium was to go into a bear market, it would have to surrender 20% from its peak at 200 levels, which means 40 rupees. It would have to go all the way down to 160 levels, which it did not. It bottomed out at approximately 184 levels and is now trading close to 200, which means aluminium is not yet in a bear market. And the stocks that traders might have taken exposure to basing their investment logic on aluminium prices would be Hindalco and Nalco. These are 2 stocks that are immediately impacted by aluminium, which is not yet in a bear market. Now let's go to item number 2, also happens to be the most critical commodity in terms of base metals to watch. This is copper. It's known as the tin roof of the economy. It's also known as Dr. Copper by commodity traders for the simple reason that without this commodity, nothing is possible. Whether it's civil construction, whether it's electronics, whether it is automobiles or anything at all, you can't do much without copper. So it's a proxy play of industrial activity in the economy, both global and national. So copper rose from approximately 330 odd levels in March 2020, which is rupees per kilo. It went all the way up to 820 rupees per kilo somewhere around May 2021. After that, it fell sharply to 690 odd levels in June 2021. Do remember that if at all it was to surrender 20% as per the classic Dow theory, it would have to give 165 rupees decline before you could say that it's turned into a bear market. But it did not. And now, after having tested 690 odd levels in June, it is back again to 800 plus levels. So there's no question of a bear market here. The stock that will be immediately impacted will be Hindustan Copper. Now, this is quite simply the most significant copper manufacturing, copper producing company in the country. Of course, there will be other ancillary users of copper which will be inversely related with copper prices because they are consuming it as a raw material. We are not touching those. We are basically looking at producers and miners of these metals. Metal number 3, I'm coming to lead. Now, this rose from 118 odd levels in March 2020 to 187 levels in June 2021. It's still trading around that level. And this has not seen much of a decline, therefore no question of a bear market exists in lead either. The item number 4 is a very interesting case here. This is nickel. This was approximately 800 rupees in March 2020, went all the way up to 1,450 plus in April 2021, and it fell sharply to 1,150 odd levels, thereby fulfilling the 20% threshold of the classic bear market theory as per the Dow technical analysis school of thought. But it has recovered to 1,375 plus levels immediately, and therefore it does not remain in a bear market situation right now. As long as it does not remain 20% below its peak and it makes a higher top or a new high above the previous peak of 1,450 odd levels, I think it will basically put back all doubts about the possibility of a bear market. The stock that will be immediately impacted by this metal will be Hindustan Copper because it also produces nickel. Now zinc, this was 125 odd rupees per kilogram in March of 2020. It went to 245 levels in June 2021. It's approximately still there. So therefore, there is no question of a bear market in zinc because it hasn't really corrected much. And the stock that will be immediately impacted by the price of zinc is Hindustan Zinc, the most prominent producer of zinc. So my friends, I've answered not only the question about whether there is a bear market in industrial commodities or it's just a breather or a pause, I've also taken up some stocks which are likely to be directly impacted. Now for another question that I was asked about yesterday's video, and this is a video that I have recorded fairly often on Equity Master, that oil is not going to go to $100 a barrel. Now somebody asked me, because of your videos, a lot of people will put back their decisions or hold their decisions of going long in crude oil because you're saying it will not go to 100. Please do note the difference between it will not go to 100 and you thinking that it will go to 80, 85. When I've been recording videos on crude oil not going to 100, it was lower than $70 a barrel. It has crossed $75 a barrel. I'm still saying it will not go to 100, but if you had bought at sub 70, would you have made money at 75? Yes, of course you would have made money because that was a short-term call. And what I'm giving you is a longer-term view that crude will not go to 100, and there is still not any guarantee that I would play God and be 100% right. I have also said that if it does go to 100 plus, it will be a photo opportunity. It will touch and go, maybe even stay there for a couple of days only to decline. I stand by that view. But if you're a day trader, if you're a swing trader who thinks that you can get a scalp for $2, $3, $4, $5 on the long side, of course you should try your hand at crude oil because your system supports so. What I am talking about here is the bigger picture. As long as you keep that in mind, we are on the same page. With this, I bid goodbye to you in this video, not before reminding you to subscribe to my YouTube channel if you agree with what you saw. Click on the bell icon to receive instant alerts about fresh videos being put up out here. In the comment section, do let me know what you think of this video. Good, bad or ugly, all your feedback is always welcome. And help me reach out to fellow like-minded investors and traders by referring my video to your family and friends. I wish you have a very, very profitable day, my friends. Take very good care of your health, your investments, your trades, your family and friends. Thank you for your patience. Till we meet again in my next video, it's Vijay Bambwani signing off for now. Bye-bye.
Interested in potentially generating gains like 168%, 132%, 108%, and 104% in the next 1 to 2 years? Then click here to register for my upcoming Rapid Profit Summit on 12th July 2021.